Hey guys, how's it going?
Hi.
Sorry, I didn't realize Jacob wasn't going to be able to start at all the meeting for you guys tonight. So I'm hoping I can hand host over to Emily. I'm actually getting ready to go on a fam boat ride around San Francisco Bay with my sister in the Coast
No
Guard. So
problem.
I can't stay on, but I wanted to see if I could get on and sign the host privileges over to you, Emily. Emily, when you're in, can you click and say claim host role if you hit more?
Let's see. Tin, 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 tin. No, not right now. I think you'd have to make me a host first. Wait a minute. Let's see.
I have to have
No,
a
I
host.
can't.
Okay. Well, I don't think I'm the host either, but I'm here. I'm in the call. I'm just not really sure if you guys are going to be able to stay on after I get disconnected. So
Who did you open the room?
I did.
So if you
That's,
open the room, you should, do you have the ability to make me a host?
I don't because I'm not a host either. So normally I log in under
Ah,
Jacob's account because on my phone it's signed me in under me. So it says I can log in as a host or claim host role, but it's not allowing me to
okay, so
do.
why don't you go ahead and claim a host role
I'm trying to
and
do
then
that, but
make me a
I need
host.
a password to do that, which I do
I,
not.
Hang on. What?
Derek's trying to get into.
It's Jacob at Thomas Reed.
Yeah.
Mute
So,
that.
all right, give us a minute. We're gonna try to figure it out.
okie doke.
All right. Well, not to keep you guys from any more of your meeting this evening, because I know we're always already running a little late for that. So, Emily, I can go ahead and hand it over to you. Derek's trying to get in right now and see if he can log in under Jacob's name.
Okay.
He's getting in as soon as he can, then he can sign the host over to you, and then we'll be signing off. So,
All right. So I still need to be able to share my screen.
okay. Well, Derek's working on it as soon as he's able to get in and hand host off to you.
Okay.
But go ahead and you guys can get started, and I'll jump in if I need to tell you anything.
No problem. Okay. Is everybody here? I know we were all kind of
Hola.
waiting. Hey Jay, hi Kathy, Brianna, Robert. How you guys doing? How was your weekend?
Good. How was yours?
It was good. It was eventful. It was football weekend, so we did a lot of watching football this weekend. A lot of screaming and shouting in my household. So, how about you guys?
Did lots of homework.
Not from me, I hope. I didn't give you a lot of homework.
No. I was researching stocks too and investment, but yeah, homework
You
like
gave
regular.
yourself additional. You're trying to get the extra credit. That's what you're trying to do. All right. Well, while we wait for me to get, we really can't do much without any one of us being able to share our screen so we can do our daily routine and kind of look at and see what happened at the market. But while we wait for that, any questions from last week and what we went over? And then we'll do our daily routine.
I did a few of the trying to learn how to do the risk and reward thing, but I didn't find anything that was worthwhile. I didn't do anything on the weekend, obviously, so just Friday.
Yeah.
And then today.
Yeah, it was kind of hard. It's kind of hard finding any good bullish setups
Did you
last
get
week.
it?
Market
Emily,
really
did you get
dropped.
it?
Huh, what's that?
Did you get it? I just made you host.
Ooh, wait a minute. Yes, I am. Okay, now wait. Do I need to claim so that when you guys leave, I can Okay, so I'm host, right? So if you guys leave, I'm good.
Yeah, it should be
Okay.
good.
All right, then I will go ahead and mark
If
this.
something goes wrong, then hit us back up and we'll fix it
Okay.
before we
All right,
hit.
guys. Thank you for stopping in. Thank you. Much appreciated.
Yeah.
Bye.
No
Have fun.
Yeah.
Okay. All right. So we can actually do the market recap. Let's see here. Who is on here that would like to volunteer to do our daily routine, and then we can pick up where we left off last week.
I can get it done.
All right, Jay, why don't you go ahead and
Let me open my internet.
okay.
I
And I
want you
think
to look
I
at
can,
my
let me
thing.
make you, I'm going to make you host and allow you to share. Actually, no, I'm going to make you co-host, because if I make you host, then I can't take back. So let me make you co-host. Make co-host. There you go. All right. So screen is all yours whenever you are ready to share.
Okay. So I go to Seeking Alpha first,
Okay.
and I'm trying to fix this window. Oh, no. Okay. So I look at the trending news here on the side, and let's see. So like there's this thing about Netflix, which has been in the news a lot. All that crazy stuff. And there's something about Tesla. I should probably read that too. So yeah, and then after that, I know there's another window I'm supposed to go through here. I just forgot which one it was. Is there like a summary somewhere?
I go to briefing.com. Briefing gives me a much better summary for me. So if you go to briefing.com and go to stock market, stock market update.
Oh, that is a whole lot better. Oh, I had read about this is from the 14th. Oh, that's today. I remember like reading this one. I don't know if I brought it up last time, but the whole COVID-19 trials in UK, that was crazy. I don't know if we talked about it. But anyway, so this is a whole lot better. Yeah, I like this one. Let me make a star on my thing. So yeah, let's just look at that. And
Yep, so
then go to
basically-
Forex Factor.
So before you get out of here real quick, so let's just gonna go through the quick snapshot, right? So markets were up today, right? Everything was in the green, like, you know, right around like over a little bit over 1% for the most part. You can see which stocks were making the headline news, right? So broad market were up based on vaccine optimism and all that good stuff. NVIDIA, you can see the stocks that were highlighted, the stocks that are, you know, obviously like in healthcare or biotech. So you can see your NVIDIA, Gilead Sciences, and IMMU, those types of things. Microsoft was in the news because of TikTok over the weekend. That, you know, the deadline to purchase TikTok was over the weekend. So these were the stocks that were in the news today. And then if you scroll down just to kind of get a market snapshot, you can see the Dow Jones was up 1%, NASDAQ was up 1.8%, S&P up. And then the New York, you guys remember last week we talked about the two exchanges, right? The two exchanges that trade stocks. You have the New York Stock Exchange and then you have the NASDAQ. So your average, your advancers today, the number of stocks that were up today for the New York Stock Exchange, that NYCE, were 2,416, and your decliners today there was only 572 stocks that were down today. In the NASDAQ, you had 2,599 stocks that were up, that advanced up, and then we had 731 that were down. So it kind of shows you that, you know, the overall, the market was just, you know, was very green today. And you can see which industry was bullish, right? The strong was tech and real estate, and the weak was communication and staples. And if you guys remember, last week it was the opposite, where the weak one was tech, right? Because a lot of money was moving. Remember, we have all that sector rotation, so money flows from one sector to the another. So you can see even on a weekly basis how money just kind of moves from one sector to another, right? So the ones that were kind of like, you know, dragging the market down last week in tech, now this week is a stronger one. It started off the week strong. And then you can see what's moving the market. You can see what's happening with crude oil. And so on and so forth. And that just kind of gives you like an overall highlight of what's what's happening in the market today. So once you're done with this page, then you can hop on over to Forex Factory. And then you can go to the calendar. If you actually want to just bookmark, if you click on the calendar tab, and now you can actually bookmark that page, so that every time you bring up Forex Factory, it just brings up the calendar page, because that's really all you need on this side.
Okay, I'll figure that out later.
No problem. So you tell me, Jay, which day of the week this week is going to have some news that may or may not impact the market?
On the 16th, Wednesday, about
On
retail
Wednesday.
sales and this stuff. Yeah,
this stuff, the FOMC. This is the Federal Reserves, right? So the Fed chair is they're gonna have some statements to put out. So we'll be looking out for that statement. And usually this is when they tell us whether they're going to raise interest rates or not. And pretty much their sentiment has been the same since the virus. So we don't expect anything much to change in terms of what their sentiment is. They're going to be very dovish in terms of, you know, they're very light in trying to, they're laid back and not trying to do anything else to, you know, to spook the market. So I doubt that they're going to have any new thing to report in terms of, you know, anything that's going to change, that's going to impact the market drastically. But it's still a news event that's going to happen, so that's something to watch out for. So out of all the days, you know, again, if you're planning ahead, Wednesday would be that day to kind of, you know, make sure that, you know, before that meeting or before the announcement or that statement comes out at 1 o'clock, that you've either tightened up on your stop losses or taken some profit off. Maybe you don't enter any new trades on Wednesday because you don't know what news is going to come out, and then look to get into new trades on Thursday. That's kind of like how you start to prepare for your week. If you're one of those people that trades every single day, then obviously you would know that Wednesday is going to be one of those, like, you know, days where it might be an opportunity for you to either quickly get in there and day trade, depending on what happens at, you know, once the announcement is made or whatever the case might be, but it's just to make you aware of what's coming up. So once we do that, then we can move on to the actual, we can either go to FinViz and take a look at the heat map, see what the movers and shakers were today, and then we can hop on to Thinkorswim and look at the actual market itself. So if you click on that heat map there, my dear.
Ooh.
So what do you guys see?
Very nice, very nice. Technology, financial, like that other screen said that were up. The other website, briefing.com.
Yep. So you can see that,
Amazon's
you know,
down
that some
5.
areas were green than others. So, you know, overall the market was, you know, was up today, right? You guys all agree with that? Just type in the chat yes, or just, you know, yep.
Yes.
And then, so what usually captures my curiosity is when you see a whole sector green and then one stock sticks out and it's red, you wonder why, right? So if you look at the financials over there, and you see JP Morgan was up, Bank of America was up, Wells Fargo was up, but Citibank was down, makes you wonder, okay, was Citibank a company related, you know, news that made it go down when everything else went up? Because typically what happens is that, you know, when one sector goes up, most of, you know, the stocks in that sector are going to go up because of, you know, because they're in that same sector. But when you have one have a 5% down day, when everything else had a, you know, positive day, you then want to go look and see, okay, what happened with Citibank? Did anything happen with Citibank? And then we can go to either the news here or in FinViz and find out what happened with Citibank. But usually when something like that happens, it catches my eye because it's like, okay, is that a shortable opportunity in an individual stock because it may have had some, you know, some news came out, right? So let's see what happened with that. So there's something to do with them failing to improve their risk systems, right? So, you know, probably has something to do with their cybersecurity and their, you know, database and stuff like that. Yeah, you can click it if you're just curious as to what happened, right? So, okay, so they're getting a penalty, right? They're getting a slap. They're getting a slap on the wrist because they failed to improve their risk management systems, right? So that's pretty much that's what caused it to go down. Pretty much, that's it. So now you know, we can move on, right? So it's just one of those things. So if you had caught it early on, that could have been a shorting opportunity for Citibank, because a 5% move in a day, that's, you know, that's quite a bit, right? And then, yeah, so once you get the lay of the land of what happened in the market, the reason you're doing this is because eventually you're going to go through, you're going to scan, and find a stock to trade, whether it's something in tech, whether it's something in real estate, whether it's something in any of these industries that were green, or if you're looking for something to short, Citibank would have been your number one thing to short, because for the most of the market today, everything was up. It would have been harder for you to find things to short. But here we are with Citibank, and, you know, a big red day would have been a good opportunity for you to get into something short if your portfolio needed it. So now that we have gotten the heat map, let's hop on over to Thinkorswim and take a look at the markets and see how they did. Any questions so far on this, guys? We're good? All right, let's move on.
Oh, let me get out of this one. Yeah.
All right, so start with the S&P, and you can either do the ETF or you can do the actual index, doesn't matter.
Okay. I had to restart my iPad that has all my notes, so let me get back.
No problem, you're good. You're good.
I
And if you guys know the
it's
ticker symbol, you can help Jay out so that he can type it in while he's bringing up his computer.
There's Q's. Which one's Q's? Which one's
So
that one?
Q's is the NASDAQ. So we always start with the broad market, which is the S&P. So we're going to do SPY.
SP spiders. Oh, that's PY. Okay.
So this is the S&P 500, and now my computer is starting to die. Hold on, I gotta plug you in before you die on me. So we have the S&P 500. So last week, if you look at that, and Jay, do me a favor. On the top of your chart settings there, you have that little spinning wheel, that settings wheel, right next to the time frame, where you have the day, the D time frame. Yep, right there. Click on that. Did you click on it?
Yeah. Oh, I have to share it. Just kidding.
No, click on that little spinning wheel right next to the right next to the day. There you go. All right, perfect.
Yeah.
And now I need you to go to appearance. Nope, not appearance. Let's go to general. Trying to remember where it is. Time axis. There we go. Okay, see where it says expansion area and it has 0? Add, give me 30. Type in 30. What I'm trying to do is trying to expand your time axis so that you have a little bit more room on the right side to see.
Okay,
to
let
see
me
it a
share
little
it
bit
again.
more.
Let me share it. Share this one. Share. Okay, better.
Perfect. See, now we
Oh,
have a little
cool.
bit more room.
Yeah.
Okay, so if we go back to Wednesday when we all were together, right? The market was kind of falling out of bed. It was coming down, and we said that we were wanted to make sure that we were, we were holding a certain price level, right? And now what I'm going to have you do, Jay, is I'm going to have you add some moving averages. So now you guys pay attention. You can always go back and watch this. Watch the replay so you can add some indicators. Remember, I told you guys I want you to be able to look at your charts clean, no mess, nothing crazy added to it. But we're going to start adding indicators slowly so that they can help us with our eyes, right? So go to where it says studies. And I want you to add a study, or actually do edit studies.
I have to share that screen. Hold on. Let me.
Okay.
I clicked around so much on my screen, I can't get it back to where it looks like this.
Okay.
There's
you can
remove
always
all, right?
you can always reset it back to the factory settings and then start over again. So at the search box, type in moving average, or just start to type in moving, and then it will bring up the moving averages.
That's not the right spot, is it?
Yeah.
Oh, average. Here. Move average.
Oh,
Adaptive
actually,
ribbon.
let's do simple moving average right there. It's right at the bottom, right before you had it.
Simple moving average. Okay.
Got it. So now I want you to add. So click on apply. And so change that to 20. So that little spinning wheel inside where it says where the simple moving, yep, click on that. Perfect. And it will bring up another box that you probably will have to share.
Oh, sorry, forgot. Okay, here we go. Okay.
And now change that to 20. Change the number 9 to 20. And
Okay.
then hit apply.
Whoops. Okay. Where's my study thing? Or my. Okay.
And add another one, another moving average. So just double click on the moving average again. On the yep, click on it again. Click on it one more time.
Open that box.
Open up that box, and then change that to 50. Change the 9 to 50. And then right at the bottom there where it has the color, before you get out of there where it says the color, change the color, because the 9 is that same color. You want to change it to a different color. So you can change it to whatever color you want to, and then say okay. And apply, and then go back and add one more and give me a 50. And also change the color. So what we're doing is we're adding moving averages, right? And what the moving averages do is that they track, they track the price of the stock over time, right? So one is measuring the price of the stock at 20 days, the price of the stock at 50 days, and the price of the stock at 200. Now make the last one 200.
Oh, okay.
Sorry, did I say 50 again? Yeah, make it 200 and give me a different color.
I was like, why am I doing that? Okay,
50
cool.
days, I know.
All right, cool.
There we go. All right, now say apply. And then okay.
Ooh, pretty. Okay, let me share it so y'all see what it looks like. It's cool.
And now we've got some lines, right? So if you guys remember when I was sharing my screen, we said that we were in this battle where we were below the 20-day moving average, but we were above the 50-day moving average. And it was a battle line, and we were waiting to see who was going to win the battle. And as long as we held and stayed above the 50, the bulls had a fighting chance, right? So all week last week, all we were doing is just watching to see if and where the line was going to hold, right? So if you want to think in terms of, okay, the bulls versus the bears, right? The buyers versus the sellers, right? last week the sellers were winning and they were dragging this thing down. If you don't mind zooming in just a tad bit for me, Jay, that would really be cool. So that you guys can see it perfect. Can you guys see those moving averages now clearly? Can you see the 50? The 50 is like the magenta looking color, almost like pink, and then the 20 is like that green looking one. So that's the battle, right? So right now we're like stuck in this box. We're in between these moving averages, and you know the bulls will win this week if they continue to go up and go above the 20-day moving average, and the bears are fighting to drag it below the 50-day moving average. Did you guys see that, right? So today was a win, even though it was a small movement. It was a win for the bulls because they kept us above the 50-day moving average. You can see on Friday how we touched it, right, with that lower shadow wick on the Friday's candle. You guys can see how we touched it. And then today we actually opened and gapped open and closed above even Friday's close. So this is a positive for the bulls because not only did we open positively, we stayed up and closed above Friday, right? So what we want to see this week is that continuation, that momentum pushing the market back up, right? So this is going to be a really good week for us to find good setups that are, you know, stocks that have kind of pulled back a little bit or trying to make new highs that we can now trigger and get into. So I just wanted to kind of give you that little bit of information there so that you have that. We can start adding some indicators, but I don't want you guys to get so crazy with adding different types of indicators that your screen becomes full of different things in there, right? Keep it simple. Moving averages is pretty much all you need, you know, in addition to what we already have in terms of volume and the ATR, right? So this is now to kind of help you with your eyes for you to be able to identify those support levels and those resistance levels, right? So if we're looking at the S&P right now and going, okay, where do we need to clear our head, right? If we're trying to continue upwards, we have to clear that moving average, which is like at 342. You guys can clearly see that, right? And our support is literally where that, you know, where the 50-day moving average is, which is right around 330-ish, right? It's a zone. It's not an exact number. It's a zone, right? So that area is where we're looking to make sure that we hold that support in order for us to maintain our bullish posture. And then for us to continue in that bullish momentum, we have to break above that resistance level that is sitting right at that 20-day moving average. Make sense, guys?
Yes.
Kind of.
Perfect. Kind of. Yes, no? I heard kind
We'll
of.
go over it more, right?
Yes, we will always go over it more.
Okay, cool. Yeah, I'm good.
Yep. So let's take a look at now the Dow Jones. That is DIA.
Diamonds.
Yep, the diamonds.
Oh, it stayed. Cool.
Yep, it stays on. So now here we go again, same scenario, right? When you zoom in, you can see that we're in that, we're in that range between the 50. Now you guys, Jay, go back and give me a back and forth, right? Tell me which one is closer to breaking that resistance level. Is it the Dow, is it the diamonds or the S&P, the SPY? Which one is closer to hitting the resistance level?
SPY.
Take a look at it again, zoom in. And look at today's
Diamonds.
candle. Look at today's
Okay.
candle and show me. Look at what today's candle closes with the S&P, and then pull up the diamonds again.
Closed at 330. Oh, the green one, 330.
Well, it's not even about the price. I just want you to look at the candlestick. Look at today's candlestick, right? Today's
Okay.
candlestick is literally like right smack in the middle of those moving averages, right?
Okay.
It didn't touch the 50. It didn't touch the 20. It's like literally like right smack in the middle, right? If you look
Right.
at the diamonds now and zoom
Oh.
in, the diamonds actually touched the 20, right?
Yeah.
So the diamonds to me were slightly stronger in terms of, the bulls actually attempted to touch the 50. Whereas the S&P was like stuck like right in the middle of those two moving averages. Does that make sense?
Mm-hmm.
And then now let's look at the
NASDAQ.
The NASDAQ, the Qs.
That was worse.
That one's what, there you go. So you're starting to see it now. And remember, the sector that goes up the highest. So now if you zoom out just a little bit more, you guys have heard me talk about the tech sector was literally skyrocketing and just above and beyond where everybody else was. So the higher they go, the harder they fall also, right? So the tech industry literally came and smacked and sat on the 50-day moving average, and now it's starting to bounce back off of that. So now if you zoom in back to the last few days, you can see that it's still closer to the 50 than it is to the 20, right? The S&P was in the center of both moving averages. The diamonds actually touched the 20-day, and the Qs are like literally just bouncing off the 50 today. So you can see that, right? And then
Yep.
now let's look at the Russell 2000, which is IWM, is the ETF for that. And these are your small caps. And you can see that even on Friday with the small caps, we actually closed below the 50, right? So if you're looking at the weaker sectors, like we actually, the weaker of all of the four was actually the Russell 2000, because we closed below the 50 on Friday, but today we opened and closed above and actually went above the 50. So today was your first positive indicator that, okay, yeah, the bulls came in and brought the Russell back up above the 50. So today was that day for the bulls where, it was that for the on Friday for the other three markets, because all other three markets closed above the 50 last week. The Russell just did that today, but on more volume. Like you can see, the candlestick was a lot bigger than the others. So now you guys, but still we're on an overall uptrend. So if you zoom back out again, even if you looked at all four, we're still in an overall bullish market. We're still in an overall bullish uptrend. We just had a week where, we just had the market get pulled down, significantly for whatever reason, but now we're looking to potentially set up to have another run to the upside. So there is your market recap and your part of your daily routine. So now, once we've done all of this, we do all of this because at the end of the day, we're looking to make one good trade, right? So when you look at the different sectors, we can find something in small caps. If you want to find something in small caps, we can find something in technology. We can find something in the S&P. We can find something in the Dow Jones, right? Now we're looking to actually place the trade so that we can take advantage of this movement should the market continue in that movement tomorrow or have that same follow through, right? So before we go scanning for other stocks, I really want to make sure that we are we're sticking with the process and not skipping a beat. So I want to pick up where we left off last Wednesday with that entry order, and we're going to use the same stock we worked on last week, even though it did not meet our criteria. So let's kind of recap a little bit. And Jay, I'm going to make you stop share so that I can now take over.
Okay, bye. Oh, I have to click it. Okay.
Yep,
Okay.
There we go. And now I am going to take over. Dun, 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 dun. And let's recap this little scenario right here. You guys remember us working on this last week, right?
Yes.
And we ran the numbers, right? Even though the risk and reward didn't work, we were running short of time, so I didn't want to have to scan for another one. But we still went in and placed the order with the OCO bracket order, where we put in the entry, the stop loss, and the target, right? And this was Wednesday's candlestick right here, and we were looking for it to actually go open above that Wednesday's candle, so that we can be triggered to get in at 62. Remember, we said we don't want to be the first people to jump off a cliff. We want our friends to jump first and see if they land in the water and they're okay. And then we go in after, right? So that's the
Wow.
scenario right there that we were looking at. So when we set that order in, or when we send that order, and even though the risk and reward didn't work out, we were just using it as an example to just be able to put in the trade. We wanted to see what was going to happen the next day if the order was actually going to fill, right? So now if I pull up my Thinkorswim, let's go new share and pull up BMO. Can you guys see my Thinkorswim okay?
Yes.
Mhm.
Okay. So now if we bring this, if I bring this up again, this is where we were looking at, and I'm actually gonna clean this up a little bit. Let's look at, let's first style.
How do you take those lines? Oh, never mind.
Let's save this and let's call this moving averages. I'm gonna come back to this in just a second, but now if I go clean, oh, come on. Studies then. Load. Give me a clean one. Just one with a 9 EMA. How about that? Perfect. All right. So now if we're now looking at this on Wednesday, right? That's the candlestick we were looking at on Wednesday. This is where we were, right? And we said we want to be triggered in if it opens at or above 62, because once we ran the numbers, we determined that our entry would be at 62, right? And then we had our stop loss here at 59.29, and we had our target up here at 65.90-ish, I believe, right? So part of making this part of automating your order entry is that you don't have to be in the computer when the market opens on Thursday. If the stock opens at 62 or above 62, you'll be triggered in. If it doesn't, you're not in the trade. So now look what happened on Thursday. So if that's Thursday's candle, did we get triggered into the trade?
From last time we did this, no, we didn't.
So because remember we put the order in on Wednesday night, so the market was already closed, right? With anticipation that it was going to continue bouncing up, giving us higher highs and higher lows, right? Because we wanted to get into the trade and now ride this next momentum, right? This next movement. So our entry was going to be right above 62. So if we look now at Thursday, look at Thursday's candle, do you think we got triggered into the trade? Because it was an automatic order to get us in at 62, right? Did the stock get anywhere near 62?
No.
No, right? Because remember, it had to be above this line that I have drawn up here at 62. So the stock opened and actually went down that day, right? It went down that day, so we did not get triggered into the trade. And now here is Friday's candlestick, right? Still waiting for it to be above 62, right? So we're not in the trade. And this is why we always say, don't jump the gun and try to be aggressive going in without confirmation. You need price confirmation to the upside. You don't want to be the person going in blindly, not knowing what's going to happen. So if you did not have rules, right, and you looked at this and just blindly bought BMO without a stop loss, without a target, without any of that confirmation, you get into the trade and the very first day you're already losing money because it was down. But because we did not get triggered into the trade, here we are. Now that's Friday. Now here we are today, right? So is it starting to give us a little bit of a reversal where it's starting to give us a little bit of a high where we can try to put this trade in again and see if we get filled tomorrow? It's still in play, right? Part of your daily routine is just to have a watch list of the stocks, because not everything is going to trigger the next day. Not everything is going to work, is going to go as you planned it to be. So this is still a tradable stock because it has not triggered, it has not hit where our entry is over here at 62, right? So we can still put this trade on again to see if it will trigger tomorrow and hit 62 so that we can be in the trade. But what I want to add in today is I want to go through talking about position sizing and risk tolerance, right? Everybody's going to have their own specific rule of what, how much they're willing to risk per trade, right? The recommended is, so let's say, for example, we're working with like a $5,000 account or $100,000 account, whatever the amount is. You have to go through and say, okay, if I have 10K, how much do I want to allocate how much capital do I want to allocate per trade? Meaning this 10K, I'm not going to take the 10K and go buy BMO shares. I'm not going to use all of that 10K to go buy BMO shares, right? Because that's putting all your eggs in one basket. You can say, okay, I have $10,000. I'm going to allocate 10% per position. So that means you would allocate 1,000 per position, which means you would have 10 positions, each with about $1,000 in each position. You guys understand that? You guys get that part?
Mhm.
So is
So
it a
once-
position, there's a
Yeah.
position for a different trade, for a different stock?
Yes, it's a position. It's a position trade for every trade you're going to put in, right? So it's taking all your capital that you have in your account
Mhm.
and saying, okay, how much am I going to allocate per trade or per position? So if you come up with your rule and say, okay, I want to do 10% of my total portfolio allocated per position, then you would take however much money you have in your account. In this example, if we're saying we have 10K, we would take 10K and divide it by 10%, which would mean that you would only allocate $1,000 per position, per trade.
Right, is a position, would you do that all in the same stock? Or would you do it in various stocks?
It would be in various stocks. That's what I'm saying. You wouldn't take $10,000 and put all $10,000 into the trade, because that's 100% of your portfolio in one trade.
Okay,
Right?
you wouldn't have different positions in the same stock at the same time?
No,
Okay,
no. You can say, okay, if I have $1,000 allocated to this trade, because now we've broken it down, right? If you have $1,000 allocated to a trade, you can choose to say, okay, I'm going to take 500 and deploy the 500 first, buy shares worth $500, see if it's going to continue to go up, and then add on as the stock goes up, because now I've gotten confirmation.
okay,
So you can leg in, we call it legging in, where you add more positions, but still within your rule. Like you wouldn't say, oh, just because BMO is going up, if my rule was 10%, now I'm going to do 20% just because it's going up. You wouldn't do that. But you can take the capital that you've allocated per position and say, okay, I'm going to take half of it and enter. And then as the stock price goes up, I can enter the other half.
okay.
And we'll run the numbers here in just a second so you guys can see what I'm talking about. So now it's a matter, so last week we just kind of like randomly did 100 shares, but now we're actually going to calculate and say, all right, how many shares do I actually have to buy of BMO that will fit my account, right? So if we all say that we're all starting with 10K or whatever numbers you guys decide you want to pick, but let me go through the PowerPoint first and just kind of go through the definitions first, and then it will make sense as we now apply it. So let's go to the position sizing rules. So the position size is the amount of capital allocated into each position. That's kind of like what we just talked about, right? And the reason we position size, it's because it's like your first line of defense on your trade, right? You have to, if you put all your eggs in one basket, like if you take all your money and put it into one trade, anything could happen with that stock and you have no control over it. Even if you have a stop loss and it gaps down or news comes out on that company like Citibank just did, right? You guys saw the thing with Citibank, right? If you had all $10,000 of your money in that Citibank trade, you've literally probably blown off your account because you have all your money in one trade. So that's why we position size. It's like your first line of defense on all your trades. It's literally your exit strategy on top of your stop loss, right? And it determines the portfolio's total diversification. So if you say, okay, I only want to have, I don't want to manage a lot of trades in my account. I only want to have, 5 trades or 10 trades going at the same time because I don't want to have to manage a lot of trades. Then you would take whatever capital you have, divided by 5 or divided by 10, and then that would tell you how much dollar amount you're going to put per trade that you're going to have on. Okay, so in this example here, I used 100,000, but it doesn't matter what the number is. What matters is the percentage. So if this is a $100,000 portfolio, meaning that you have $10,000 of trading capital, right? If you say my rule is I'm going to take 10%, that would mean you could have $10,000 per position. It allows you to have 10 different investments. So that means you could have, you know, some shares of a Microsoft, some shares of an Apple, $10,000 allocated to Microsoft, 10K allocated towards Microsoft, 10K towards BMO, 10K towards another company or whatever company, like, you know, you're gonna, whatever companies you're gonna trade or you're gonna have your money allocated to. Doesn't mean that you do it all at once. We're just saying that that money is allocated per position. So you're never gonna go over 10K per position whenever you're going to buy shares, right? If you choose to go 5% per position, then now that gives you 20 different investments. So now that means you're managing more because you're putting in a lesser percentage. If you do 10%, you're only having to manage about 10 different trades. And that's if you have all 10 going on at the same time. If you're doing 5%, that's 5K per position, which allows you to do up to 20 different trades. But just because it allows you to do up to 20 doesn't mean that you should have 20 going on at the same time. It just says that's what you're allocating to that position. Does that make sense, guys?
Mhm.
So once
Yes.
you've, I'm sorry, go ahead. Was that a question?
Oh, no, it makes sense. I'm just
Okay,
following.
perfect. So once you've decided what your position size will be, then we have to factor in what the risk tolerance will be per position. So you have your overall portfolio design. So if we say we're going to do 10% and use 10%, so now we're saying 10K per trade. We can change these numbers and reduce it down to 10,000. If we all agree, can we all agree we're going to start with a $10,000? Like, can we use a $10,000 portfolio as our group example moving forward for everything that we do?
Yes.
Okay, perfect. So then all that would do would just change the numbers, right? And then I would change it to 500. And there we go. So, so if we're doing, if we have a $10,000 portfolio and we said, okay, we want to have up to 10% of our capital per position. So we're taking our 10K and dividing it by 10%, which means we can have, it allows us to do 10 different trades, meaning we can have 1K allocated to BMO, and then we can go scan for something else, find another trade for another company and put 1K to that trade, find another company and put 1K to that trade. Does that make sense, guys? And so on and so forth, right? Doesn't mean we have to do it all today, but it's just saying that we're allocating $1,000 to 10 different investments, okay? We're just using BMO as our first one today. Now, once we've decided, okay, we're gonna put $1,000 per position, we have to determine how much of that we're willing to risk. Just because we have $1,000 per position doesn't mean that we're risking $1,000. We're just allocating $1,000 to our BMO trade. But once we've done that, we then have to figure out what is our risk tolerance. And that's the amount of that position that you are willing to risk, right? It can be a percentage of the position size. So it can be a percentage of the 1,000, or it can be a percentage of the whole portfolio, right? Typically, most people go between 0.5 to 2%. I'm just gonna do, for the sake of making it easy, just for the sake of just kind of putting us in the middle, we're just gonna use, our rule will be 1%, right? We're not gonna risk no more than 1% per trade. So if we have $1,000 in a trade, you guys give me the numbers. If we have $1,000 per trade and we only want to risk 1%, that means we can't lose more than what?
$10?
Can't lose more than 10 bucks. But remember, if we're going to have 10 trades going on, that means it's a total of 100 bucks, right?
Okay.
You guys are seeing that? So it's all a matter of position size, so that we don't risk a lot, right? Especially when you're brand new. right? So then that tells us now how many trades, how many shares we can buy if we only want to risk $10 per trade. Does that make sense?
Mhm.
Okay, no.
You guys are with me
No,
so
no.
far? Because now we have the $1,000 allocated to it to BMO, right?
Right,
So once we have the $1,000 BMO of BMO, well, how much are we really, when you look at your overall portfolio, you've got $10,000 in that account. Where's your pain threshold,
so,
right? Is your pen, if you lose $1,000 out of your 10K, are you okay with that?
Mm-mm.
so since, when we calculated last week, our risk was $2.71, then we can only buy four shares.
You're getting there. We're getting there. Absolutely. We're gonna get to those numbers in just a minute. Yep. But that's exactly what we're saying,
Okay,
right? Because you don't want to risk more than you can stomach in, right? So
Right.
and think about it this way, guys. If you have $10,000 in a trading account and you lose $1,000, that's a 10% drawdown when you think about it. And I want you guys to start thinking about this in percentages. So if you have $10,000, right, and you lose 10%,
right.
that's $1,000,
Mm-hmm.
right? So if you're okay with losing 10% in your entire in your account, then your threshold, then your risk tolerance is going to be $1,000, right? But 10% is a huge drawdown in an account. 10% is what you get when you have like what we had in March when we had that, that huge, with the virus, right? You never wanted your account to go more than actually 4% really is like that minimum where like, okay, we need to have a conversation and find out where we're making our mistakes, right? So 10% will be a huge drawdown. So this is now the risk tolerance now is where it becomes on an individual basis. Where is your pain point? So I think all of you guys said nobody's willing to risk $1,000. No, nobody's willing to risk $1,000 out of their 10,000, right? Is anybody willing to risk 500?
Yeah.
So out of your $10,000, you're willing to risk 500. So that would be a 5% drawdown. Right? Because if you take 10,000 and divide and multiply that by 5, that's 500, right? So now you're at 500. Anybody willing to go lower than that? Is that too much for somebody else? Again, this is the risk. This is where you as the individual comes in as to where your risk tolerance is. So if losing 5% out of your 10K is not a painful number for you, then you're okay with that. For somebody else, it might be. Somebody else might say, I don't want to lose $500. I only want to lose 200. So whatever your number is, that's where you decide, okay, how much am I willing to put in to risk per trade? So for the overall class, we're going to say we don't want to lose no more than 1% of our total position. So if we have 10K and we say we don't want to lose no more than 1%, that means we can't lose more than $100. You guys see that?
Yes.
So we're going in saying, okay, we know when we enter into a trade, we cannot lose more than $100 per position. If you have 10 of the positions on, and everything goes haywire, then the most you will lose is 10% of your entire portfolio. Because if you have 10 trades on, right? If we have 10 trades on and we're saying we're willing to risk $100 per position, if all of those trades go against you and each trade loses you $100, now you're down 10%, which is what that normal industry, like that normal amount should be when you have a really, really bad correction. Make sense? So you never want to over leverage what your risk tolerance is, because if you what you're trying to do is you're trying to avoid the risk of ruin. Because if you don't have these numbers specified and you don't have stop losses, or you don't have these your percentages lined up, if the market drops, you could literally lose 50% of your whole position, of your whole account, if you don't have all of these numbers specified. So that's what determines now how many shares we can actually get into, put in per trade, right? So now if we go back to BMO and now put in that that trade and go, okay, so last week we just kind of like ran the numbers. Now let's position size according to our rules, right? We said we have a $10,000 account. So that means we're going to allocate $1,000 to the trade, correct? So now if the stock price is $61, you would take $1,000 and divide it by 61.69. That will tell you how many shares you can buy.
Yeah, if you're not going to lose, right?
Say that again.
So then you further would have to analyze that on what the loss would be.
Oh yeah,
You might
So,
not be able to buy $1,000 worth at $61.
well, once we determine how many shares we're going to buy, now based on the number of shares and how much we're willing to risk, we'll determine where our stop loss, based on where the stop loss is, it will also tell us how much we're going to lose, right? So we know we're risking how much per share, $2 and
71 cents.
$2.71. Was that the number? 271.
Yeah.
Yeah, 271, because we were getting in at 60. So here we go. So now if we look at this, now I'm going to introduce you to something else, which is a really, really fancy tool that I like to use. It's called a risk graph. And it actually helps do the math for me without me having to actually think about it. Okay. So if I go to what it's called an Analyze tab here on Thinkorswim. So if you guys remember, we talked about we're going to be spending a lot of time in the monitor tab. I'm in the wrong account here. We're going to spend a lot of time in the monitor tab, in the charts, and now we're going to in the trade tab. So we have the trade tab. This is where we click and put our orders in. We have our charts, right? And you guys can see that our order is still there, right? We still have that order pending to get in. And so if it triggers at 62, we'll be in, and that's our target right there. And this is our stop loss right here under support. And I think is that target right? That it seems a little off, way off. But no, that's actually right. It's right, because that's 60 and this is 59. Yep, because it's half the ATR under support. That's the ATR is $1.48. We're good.
Yeah.
It just looked a little bit far off. But that's where we are. So now if I go to my Analyze tab, I can say, okay, let me minimize this and let's go all of this. I'm just going to clear up some stuff here. So this is what your position looks like in a picture. So if I was to draw a picture of what your account looks like, this is what it looks like. When you buy a stock, when you buy shares of a stock, right? Whatever price you pay for the stock, that's your entry price. So if we're saying we're buying at 62, 62 would be our entry price. So right now, this little gray area, let me see if I can draw it out for you guys. This right here, this is the current stock price. You guys see that little line right there that I just circled over?
Mm-hmm.
I'll do it again. That right there. You guys see that?
Yeah.
That's the current stock price. And the current stock price right now, it's like 61 something, okay? We are waiting for confirmation for it to continue to go up. And when it gets to 62, that's when we get in, okay? So our buying price is at 62. We all see that. This is that line right here. This is that 62 entry price, right? So if we get triggered in at 62 and the stock does what we anticipate it to do, and it goes all the way to where our target profit is at $65.90. Okay. With 25 shares, let me see here. Let me see where my shares are. Let me click this. Let me just start with one share so that you guys can see the numbers. Okay. Now look at the numbers here, right? Because this is exactly what we did, what we calculated with hand when we did the pay and did the ATR and all that stuff, right? It's the same numbers that we have here. So if we have one share of BMO, and it gets to $65.90, we stand to make $3.80 for one share if we just bought one share. If it goes the opposite direction, meaning we get triggered in at 62, but then it starts to go down and hits our stop loss of 59.29, we are now risking $2.81 for the share, and that's what we would lose out of our $62. You guys see that, right? So what's at risk is not our $62. We're only risking $2.81 of our 62. You guys see that? Does that make sense?
Yep.
So it's really not the 62 that's the most important number. The most important number is this number right here, that 281, right? So if it cost you $62 to buy the share, and now you've lost 281, that means your account now has $59.19, right? So we're not risking the whole 62 because we have stop losses in place, because you never want to lose 100% of your investment, even if it's just one share, right? Even if you're just buying one share, to a lot of people, $62 may be nothing, but you can't let this stock go all the way to zero and lose all of your money. You have to be able to determine where your pain threshold is, right? And that's where we use the stop losses. And then now the position size will tell us how many more shares we can add to this. So now check this out, depending on who you are as the individual and also the amount of capital you have in your account. You can start with one share. You put in $62, you'll make $3.80 if the stock goes up, or you lose $2.81 if the stock goes down. You can up it up and say, okay, I'm gonna go 10 shares. Okay, 10 shares now will make you $38 if it goes up to our target price, or it will lose us $28 if it goes to our stop. Now for 10 shares though, you'll need to have how much dollars? Because it's $62 per share. So now we're going 10 shares, you would need to have $620 to buy 10 shares. You guys see how the math is going?
Yes. Okay.
Is that starting to make sense? So now if we said we've allocated $1,000 to this trade, right? We would be doing somewhere around 18 shares, if my math is not wrong. So if I change this to, I can just keep clicking up until we get to where we're spending about $500. So if I go 18 times 62, we're a little bit over 1,000. So we will need to do like 16, I think. So, and you're not always going to hit the number on point. Like you're not always going to get to the exact 1,000. You may be a little bit under, you may be like at 995, or you may be a little bit over and go to like 1,010 or whatever, but you want to make sure that you stay within that range, right? So now 62 times 16 is 992. So the most we can buy is 16 shares at 992. We have a potential to make $60 if it goes up, or lose $44 if it goes down.
Okay, where do you see 992 in this chart? I can multiply it out in my head, but is there a picture of it in here?
No, it's not here. I'm using my phone calculator to tell me how many shares to buy.
Okay, all right.
Yeah, it's not here, but what it's telling me is as I up my shares, let me delete this here. As I increase my shares, let me see if I can bring this up just a little bit so you guys can see this. As I increase my number of shares, it changes the math here for me so it can tell me what I'm risking and potentially going to make.
Okay, yeah.
right? So this is kind of like your little cheat sheet calculator. It tells you based on what you're willing to risk per trade. So if your risk tolerance is $50,
Mm-hmm.
right?
Okay.
That means you wouldn't be able to do more than 16 shares. If you don't want to lose more than 50, this is going to put you like right in that range, right? And we're also allocating $1,000 per, so we can't go more than 16 shares anyway, because we're saying we have 10 grand and we're allocating $1,000 per position. So it puts us at 16 shares because the amount of capital it would take to buy 62 shares is, I mean, to buy 16 shares at $62 per share is going to be about 1,000. It's going to be $992.
And it just so happens to be under our loss too, our risk.
Right. So now your risk now comes into now what your individual risk tolerance is, right? So we have position size rules, which we said, okay, we're going to do 1%.
Okay.
Okay. Then now we come to the risk tolerance rule,
Mm-hmm.
which is now your individual, like you as an individual, where's your pain threshold? Where does it hurt for you? Right? Does $50 hurt for you? Does $25 hurt for you? Like what hurts for you? Because now you're investing $900 into the trade, $992,
Mm-hmm.
and you're risking let's call it $45. So if you take $45 and divide it by 92, you're risking about 4% of your total capital. So if that number you're not comfortable with that number, then reduce the number of shares. If you only want to lose 1%, then reduce the number of your shares.
Okay.
So you don't have to do what the actual dollar amount that is allocated to that position is. You don't have to use the whole $1,000 just because that's the rule. What's more important is your risk tolerance. If you losing 4% of your capital in a trade is too much for you, then reduce your position size. So now we can go, okay, if we do 10 shares at $62, now it's only going to cost us $620 of our 1,000 that we're allocating to this trade. But now we're only going to lose $28. You're also going to make less as well. Does that make sense?
Yes.
Yes.
And we're good?
Mhm.
Perfect. So now if you take the 1,000, so now if you take $28.10 and divide it by the $1,000 that you have allocated to this position, now you're at 2%. Right? Because before, when we were at 16, how you calculate what your risk tolerance is, when we were at 16, we were risking $44.96. You take $44.96 and divide it by 1,000, because we have 1,000 allocated to the trade, we were risking 4%. Now we go down to 10, and now we're risking $28.10, but it's still the $1,000 that we have allocated. We're not using the whole $1,000. We're only using $620 of the 1,000, but it's still $1,000 allocated to that position. And now we're at 2%. With less shares. So how you reduce your risk is by reducing the number of shares. So even though we had $1,000 allocated to this trade, we're only using 600 of the 1,000 to make us 38 if we're right, or lose 28.10 if we're wrong. So now when you go to put your order in, and now you're putting the whole thing together, you're gonna go right click. Remember we saved our custom order, right? So now we're gonna go right click, and we're gonna do the same order bracket. And now we're gonna click on that. And rather than us going with a defaulted number when we're paper trading, start to practice with whatever capital you're going to be using for your own actual account, and change the number of shares. So now we're doing 10 shares. So the number of shares that we're going to buy are going to be the same number of shares that we're going to sell. And so now we have 10, 10. And now we just need to make the changes here as to whatever our numbers are going to be. And we said we want to get in if it's above 62. And we want a little bit of wiggle room. If it gets to 62.10, get us in there too. Between 62 and 62.10 is where we're willing to pay to buy. And then we're putting our target at 65.90 and our stop loss at 65.29. These are already saved already. We already have these preset. And now we can confirm and send. Here's our entry order. And now we'll see what happens tomorrow. The order is in. I'm actually going to go in there and cancel the $25 one. I'm going to cancel the 25 so that we don't get confused. So I'm going to come here and cancel that order so that now we have the one. So tomorrow, I do not have to be in front of the computer. When the market opens, if BMI is above, hits 62, we're going to be triggered in 10 shares. And then once it triggers this buy order, these two orders are now contingent upon what happens with BMI. If BMI goes up and it hits our profit target of 65, it will cancel this order. So now everything gets taken out because we hit our target. If BMI goes against us and actually comes down, we're now going to be taken out of the trade with the loss of $2.81 per share. We have 10 shares. We're going to lose $28.10. And then that will cancel this order. So there will be no other order resting here once whichever one kicks in first. And now if we look at the chart, we can see that here. So now here's our 10 to buy to get us in, here's our stop loss, and here's our target. And it's now in based on our position size and our risk tolerance. Based on what we're willing to risk and what we're willing, how much capital we're allocating per trade and how much we're willing to risk per position. And that's how you put it all together. And I know it's a little bit confusing when we're doing it for the first time, but this is what we're going to spend the next 2 weeks on, is rinse and repeating this until it all comes together. So now we're just piecing everything in. So we start from doing the market, the daily routine, go through the markets, find what the market did today, get the news, look at the headlines, scan for a stock, find a candidate, run the numbers, figure out what your allocation will be. We already have that number, it's 1,000. And then now figure out what our position size will be, put the order in, rinse and repeat. So now next on Wednesday, what we're going to be doing is now scanning and doing multiple of these so that it can the repetition will start to make sense. Does that work for you guys?
Yeah.
It's difficult to introduce a new concept, especially once we've learned so much more, right? Because we've gone from support to resistance to finding out, where our ceiling is, where our floor is, to finding the trigger, to doing all of that stuff. But now when we're doing it all together in one day, it will start to make more sense because we're going to keep doing it over and over and over again. So hopefully today was just a little bit of a recap, and I don't want to go over because we started a little bit late. But what I want to do is pick up on Wednesday and start to now go through the process, scan. You know how to do the daily routine. So now it's going to be go through the daily routine, less than 5 minutes on the daily routine, scan, run the numbers, put the order in, position size, risk tolerance, repeat it. So we probably can be able to maybe be able to do maybe 3 or 4 on Wednesday, because we're going to start to just kind of like run through the numbers again over and over and over again until it makes sense. Is that helpful for you guys?
Yes.
Yeah, but I need help figuring out how to reset my screen. I don't.
All right, let's get
mine is totally blank.
Okay,
I
do
don't
a
know
screen
what-
share.
Okay.
I'm gonna make you host, Kathy, if you want, and then do a screen share.
Okay.
Make you co-host, and then now you can screen share.
Okay, let's see. Screen share.
And let's see what you got going on.
Okay. Nothing.
All right, so now let's put a ticker symbol up there and let's see what is coming up.
Okay, so I'm clicking over here,
Okay.
trying to get
All right,
that.
so if you go up there, you have 2 red flags. You have a
Oh,
red flag that's number 2 and a red flag number 1.
Okay.
There
all
you
right,
go.
got that. Okay. All right.
It looks like it's an orange flag. Is it an orange or red? I can't tell.
I don't, it's one of those. But
Yeah, so now,
it's the number 2. So is that they're matching, right?
yep, so they have to match. So now if you go to your trade tab
Okay.
and put it on the same number. So move your cursor out and put that on the same number now.
Okay.
So that now when you're moving around different tabs, it's gonna be the same ticker symbol. Go to your Analyze tab
Okay.
and put it on the same number. Yep,
that
right there.
Right here.
Click on that.
Okay.
Perfect.
Okay.
Go back to your Monitor tab. And then under your Monitor tab, go to where it says Account Statement. And right there where it says Show Symbol By, there's a blank, and then click on that same link and then make that a 2 as well.
Right here.
Yep. So now everywhere you maneuver in Thinkorswim, as long as all of those are aligned together with the same number, whatever symbol you have typed in is what's going to transfer to each tab that you move over to.
Okay. All right. And then you said, like, if you were to reset to factory setting. So what all do you lose if you reset to factory setting?
It would be whatever trades you have on or whatever indicators you've put on there. It's going to just reset everything back to however it was when you first opened up Thinkorswim, meaning like literally nothing.
Nothing. Wow.
Yeah.
And
So
so
now
there's
if
no
you-
way to get it all back.
So what else did you lose? Did you lose anything else besides that?
Well, I thought I had a chart in there from you that we uploaded.
Okay, so click on the charts.
Okay.
And now go to where it says studies. And
Okay.
now go down to where it says load study set. So anything that you have
Start.
that's already saved is going to be there. So
Okay,
if
so
if
it's
it's
nothing.
not there, it didn't save. So what did you have on there that you wanted to put on?
Well, that's what I was trying to figure out what I lost. So I lost that. But another thing that I'm having trouble is the ATR. Is that,
You want to add it there. So right
I
where
don't
you
see
are.
it, but I don't see it on the screen like I see it on your screen down here where volume is, or kind of in that area, but
Mhm.
I don't see it anywhere on my screen.
Okay, so right where you are, click on Edit Studies.
Okay.
And at the top there, it's actually because it's an A, it's right there, ATR. So click on that, double click on it,
Okay.
and then click Apply.
Okay.
And now save this study. So that if you click Save As Set, you can now name it, ATR, right? It's the chart that has your ATR. So you can say, and now you can save it
Okay.
and say, okay.
Oh, okay.
So now there you go. So now if you ever wanted to have another chart that didn't have ATR because you don't, you want to look at a different chart that's much, whatever, you can add another study and then you can rename it something else and then, save it. So now when you go to your studies down up there, you can now go to load study set and there you go.
Yeah.
So as you start to add more indicators to your charts, and I don't want you guys to do a lot of indicators, really the only thing that you should add to this is just the moving averages, and that's about it. So I want you guys to have a clean chart like how you have this one right now. and then now do another chart where you add the moving averages, the 20, the 50, and the 200. And you can always, go back and forth and look at a clean chart with no moving averages to kind of test your knowledge now, right? Look at a clean chart without any moving averages and see, okay, can I identify support? Can I identify resistance? And then switch to the one that has the moving averages and see where those moving averages are lining up, whether they're lining up where your support, where you had pictured the support to be without the moving averages. That's how you start to test your knowledge as to whether you're able to at least be in the ballpark of where you're seeing support and resistance.
And so, and then to do that, you toggle between the studies.
So yep, you click on studies.
Toggle between the studies then.
Yeah, you click on studies. So now you can edit studies again now. And now you can add the moving averages like how Jay did. So if you want to go back and watch the recording, you can go back and watch the recording, add the studies, and then save that study as moving averages. So now you're going to have one study that says ATR and one study that says moving averages.
And then how do you go to a study? Then how would you go to one that has nothing?
So now when you go to your load study set, you're going to have two, right? So when you add the moving averages and now you go to your load study set, you're going to have two. You're going to have one that says ATR and then the other one that you create with the moving averages.
Do I have to create one that's just blank?
I would prefer that you do.
Okay, so like there's no default like to go back to have nothing. I need to create a blank study.
Yeah, and this can be your blank one. Like the one that has the ATR can be your blank one because it doesn't have any moving averages on it. It doesn't have any other lines in the chart itself. You just have the ATR at the bottom there. So this could be your clean one.
Okay.
And then now if you add the moving averages to the other one, save that as moving averages. And now you'll have those two to switch back and forth with. Okay.
All right. Thank you.
You're most welcome. So I will put up some, I was gonna give you guys some other videos today, but because we didn't get to it, I'm not going to share them today. We're just gonna pick up on Wednesday, but go back and just keep practicing putting in that order entry, right? Look at the order entry and see how you put the order entry with the stop, the target, start to think about what your risk tolerance will be. Right? Think about what you're willing to risk per trade, because now when we put in these trades in our own accounts, just because my risk tolerance says I can do 15, doesn't mean that you have to do 15 if that's not what your risk tolerance is. If you have a higher or a lower risk tolerance, then you're going to position size accordingly to whatever your risk tolerance rule will be. So I want you guys to just kind of go back and just practice just putting in the order entry. Think about what your numbers are going to be. What are you going to start trading with? Are you starting to trade with 1,000, with 10,000, with 5,000? And then that will tell you how many shares you can do when we start to do the numbers again. But I know it's a lot of information. I know it's overwhelming, but I promise you it will come together the more we do this. So just be patient with yourself. This is the frustrating part that starts to come in. I can see people like, but it's okay. We're going to get you guys there. Sounds good?
Okay.
Thank you.
All right. Well, guys, thank you so much for hanging tight tonight. And I'm sorry we ran a little bit over, but we did start a little bit late, but we'll continue on Wednesday and we'll pick it up. If you have any questions, we'll bring them up on Wednesday.
Okay.
All right, guys. See ya.
Bye.
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 I do that too.